Good morning to everybody. I will try as much as possible to finish and end this training in 1 hour. I don't want to. In front of me is the chart of and which we are quite familiar with. We are quite familiar with what we are seeing. Past videos that I made about this corrective work. And like I said, that the first thing you have to do in any analyzing any trade or pair or any function is to first look at the higher time frame to see what the trade is. Not only after you've done that, you the true direction of your trade and what the trade is trying to do in the middle. In the middle, what level do you have to trade? And I did a second video last week also. I think about 1 hour video on the use of 1 hour trend line as well as use of trend line as well as 1 hour PMB to signal the end of a structure. In a structure, you can have structures within the structure, and that is what is most important. How we deploy all these tools to navigate, and you must know that. Like we know, this is a corrective structure A on the monthly time frame, and a corrective structure B on a monthly time frame, and this is a corrective structure C on the monthly time frame. Now, within this structure, you have 5 major higher time frame structure, which you must understand. So within the major structure, you are going to deploy several trend lines to navigate the end of these structures. Now, we said that this is a wave, the wave 1, which is a structure within the bigger structure that we are seeing, the whole of this structure, entire structure. So this is wave 1, which is a structure in itself. And this is wave 2, which is a structure in itself. And we say that this is wave 3, which is the third structure in itself. And now that we are seeing unfolding wave 4, which is the 4th structure and another structure in itself. So we must know that. So 1 structure, A structure, 2, and a 3, which is the 3rd structure, and about unfolding the 4th structure before we have the 5th structure. Now, when you now take each of these structures, there are so many trend lines you have to draw, knowing the behavior of the trade and all of that, to be able to tell yourself, now, within these particular structures, like for instance, the 4th wave structure, which is the 4th major structure, how many structures are we going to have and how you're going to deploy? So you don't see these, oh, it's a price action for upside, and you now think that it's going to go all the way up. It's when you don't know anything that you will think that way. Now, it doesn't work like that. So I think we should have known that by now, that structure does not play like that. You must know that there should be a limit, up here for these 4th corrective wave, and you must play within that limit, And let me go down to, you can see the price action here on the monthly time frame, to tell you that, okay, you are in an uptrend, or probably you are correcting. Yeah, you could make correction. For some, it could be, if it's at the end of a structure, complete structure, you can say, okay, yeah, it's the beginning of an uptrend. But now we know that it's not the beginning of any uptrend. We are still correcting 4th wave structure. So within the week, we can see the monthly has signified that, yes, the price action is towards the upside. And when are we going to finish it? I don't know. And we're going to look at that all together. So the weekly time frame also told us that, okay, this is actually going up, like this. If we don't know that it's with 4 we are correcting. When you don't know structure and you don't know how wave is all about, you might tend to think that, okay, now this should mark the beginning of the end of a structure and we are going in an uptrend. So thinking that we are going an uptrend, you might think that this thing now, okay, yes, wave 1 is done and it's coming to wave 2. That's a kindergarten stuff. A kindergarten stuff, a rookie that does not know what happens in the middle will take this as, okay, yes, these and these had gone up on the weekly time frame. So we are having wave 2 is going to come down and it's going to come to 61 or 76 or 85, and you think it's wave 2. It doesn't work like that. That is not what it is. So, and you must know, and you think that, oh, this thing is going to go all the way and break this resistance. You are joking. So you are joking, right? Because you shouldn't expect it. And I will just show us where to expect the limit of this. And before we start with 5 to end the whole structure that started from here, for how many, you know, it ended, that was December 2020, and it started exactly January 2021 till date. So it's gone over a year and a half now. It's gone over a year and a half now. So I won't be surprised that if we're going to run the entire year doing this, probably maybe around between September and December, we might just finish this structure. Yeah. So it might take that between September and December, maybe we might just finish this structure. But when it finishes is when it finishes. So now, when we told ourselves we are correcting this wave upwards, and where it's going to stop is what you don't know, because it's corrective. For instance, if you take from here, because this is the beginning of wave 1 in the major degree and end of wave 1 and end of wave 2 here. So if you want to see where wave 4 should end, ideally, you will start from where the end of 2, then you take it to the end of 3. So the retracement from the end of 2 marks the beginning of 3, right? Okay. So the retracement from here to this one, this should be 38.4 and not more than 50% retracement marks the limit where you should expect action, you know, for us to complete with 4. Now, if that is the case, that it's going to go up, for sure, I know that we've not gone to the limit or get to the limit of what, of where wave 4 should stall to give rise to wave 5. We've not gone there. And nobody can tell me, or we don't know for how long this is going to go up before we have a correction. Because we know it's a correction, then it's going to go up as A and come down as B and go up again as C to finish up the correction before we have the 5th wave. Now, here is the thing. When it's going up, you don't expect it to, it may have first gone up like this in a straight line, and coming down as wave 2, it may come down like that also, which is B wave, in a straight line or not, and it might be more complex, and it might do a lot of consolidation in the middle. I don't know what they're going to do in the middle, so nobody knows. The only thing is that where are we going to put our feet when we are trying to come down? Where are we going to place our feet? I don't know. So we're going to just have an idea of where we're going to place our feet. And again, as B wave is unfolding to the downside, we are going to look at the internal structure of B wave to say, okay, this is most likely where the limit of this wave is going to be. So, which is very important for us to know. Now, of course, these has told us we are correcting upwards. Now, this is a weak action. You can see what has happened on a week. A doji had formed to tell us that that has signaled the end of A wave. That doji has signaled the end of A wave, except something that happens in the coming week to say, okay, they have not finished the end of that wave. But so far, we can see it has signify the end of it, and we may be seeing further downside. To see further downside is not apparent here, and that is why we have to look at, trade on different time frame to see what most likely will happen. So something is not apparent. So if this is a doji, are you going to wait for a whole week to close before you plunge in? No. If you are waiting for that, you will miss a whole lot of entry. But it's good to look at things also in, on the big time frame, so that you have the right perspective of what exactly the trade is doing. So let's go down to, yes, this confirms that it's an upside. But when you don't know, and you think, oh, they're going to do this and go more upside. No, you must understand what is happening in the middle here, which I have told you is a correction. And so I've got this, in the bag, and that is, the gain and the gain of the pain of trying to study wave structure and how it works, And so this is coming down. So let's look at it on the daily time frame. Looking at switching to the daily time frame, now we can see that actually, yes, indeed, it went up collectively. Now, this price action here, look at this price action here. This price action here, I want to enlarge it for you to see very well. So this price action here, when the price was going up, look at it. It could be the beginning of the fact that they might be ending soon. So you can see at the tip end here, you can see that dot, and that's the price action for downside. But then anybody may have said, okay, let me begin to sell from here. And so what we inform you not to sell from there, because in as much as, okay, it's confirming that we are going down, and after this uptrend here, you may think it has finished, and that this EMA on the daily serves as what a resistance, and you now think what happened here is a gimmick to force you out. No, really, it's not really, because at the end of the day, the little patience and the internal architecture that you're supposed to understand is what will take you out here. Because by the time you think, okay, they have given me this price action here, let me just begin to sell from here and put my stop loss exactly at the dot here, and this happens here to take you out, and you think that they are so when you understand structure and what may happen, and that the structure to you is not complete, you try to project where you think that completion is going to be for you to put your stop loss in case the price decides to go there. Now, with these, and you have a second one appearing here. These are the two. This is the early warning or early sign. Now, this has confirmed that they are going down on the daily now. So this has confirmed they are going down on the daily. Now, when you don't understand what this price action means, and you think you are coming down, and this has told you they are coming down on the daily here, and you saw this, then you say, oh, in attempt to interpret the engulfing candle, you now want to interpret the engulfing candle because this one had gone past this one, and this one had formed. You now say, oh, we are having more upsides, and we are not having more upside. You've got to understand clearly the structure in the middle here, and this one should not confuse you. For those that read candle alone, it's your Waterloo to say this is an engulfing candle that has gone past this one. Oh, so it's just an engulfing candle. Yes, it's an engulfing candle. So it's going to go up. For me, after seeing this structure here, 1 and 2, and to count the entire structure of this, which I'm going to come to, I know that now we are going down. We are going down. So, and in case it's not going to work like that, if I entered here, I will be now more maybe more miser now, more miser with my states, or tighter with my trade stop loss, to know that if you should go beyond this one now, something else is happening. So, but again, with what I taught us, we are going to look at this structure in the middle here and what has happened. What kind of structure do we have for A wave? If indeed this one is an A wave, what structure do we have? Then before we even do that, we will need to know, okay, where do we expect that the fourth wave should terminate ultimately if indeed this is the end of 3-5, major. So this is an ending diagonal, and the fourth wave of the fifth wave of the third wave major, and this is where the fifth wave of the major started. This is the fourth wave of that third major. The third wave major, this is the fourth wave of it, and the fifth wave started from here and doing its own internal structure to do its fourth 4 of 5 and the last 5 of 3-5, which is here. Now, so we believe that we are doing a fourth correction, which eventually first would use this as a resistance. Price will push low, break it up, and come right down again. So you should understand when it breaks it, it's not that it's going to break it permanently. You think that if the way you are learning your support and resistance, you say, okay, it's going to break it, come back there to make it a support and go higher. It's not going to work like that. You must know that we are correcting. Now, let's look at this again to see where we expect we fall to actually terminate, to end. So if you look at this again, this is 1 and 2. To make it faster, so we can see I've done this. The 2 actually ended here. So, and what I taught us. So this is where 2 started. This is 1 here. It started here, 1 ended here, then 2 started from here, and 3 had ended here. So where do we expect the fourth wave to be? So we take our free retracement tool from the beginning of 2 to the end of 3-5. We've not done 5 major. So we have told ourselves that now this area, let me make it tick a bit. This is where we expect that 38.2 is where we expect, yeah, that's where we expect 4 to stall, or 4 may actually should not go beyond here. Okay, shouldn't go beyond here. So between here and here. So, but now to know if we're going to breach this, anybody that wants to trade may just put 0.01 here, and you now try to watch what price is going to do between here and here to see if you're going to trust bigger. And of course, you must be counting the wave also in the middle to know what kind of wave structure you are having and where it's likely going to complete. Because between that 50 and 38, how many pips is locked inside? It's quite big. It's quite big. That's over 200, which can blow your account. So you must know, and if you are doing this and say, oh, that's 222 pips. So you must know that it's not just like that, because price may actually walk past it or not, but we'll still wait and see. Yeah, this has not been breached yet. It has not been breached yet, but it may be breached or not to get to this point. And because it has not breached it, I believe that we might be having a messy structure that will waste our time and frustrate us in the middle to step outside here. So the third leg will now break above here, get here, and now begin to do wrong with 5 to the downside. That may well play out. So we know what it is now. So let me now switch back to the daily time frame. So now looking at the daily time frame, so we can see that let me confirm where that has stored, where exactly price stored. Let me confirm where exactly price stored. Yeah, price actually stored here. So let me take this one off. Okay, price stored here. So let's go to the daily again. Now, so price actually stored. So price started from here. And I believe that between these, where you have this golden yellow, these are the areas we're going to really now map out and see what we are seeing in the middle, what kind of structure we are seeing in the middle. Let me go to 4 hour time frame to see what we are seeing in the middle. Now, it looks so much that in the middle, what we are seeing is actually a bit different from what we thought. Now, if we look at this wave from here to here, you know, and up to this point. So for me, looking at this, you know, we were thinking that it is this is 1. So we think that after we add this correction in the middle, and we thought that we finished 1 here, which is an ending that we now had this move and this and this before this. Because if you look at it on the higher time frame, you will see it much better than actually it's from here to here and before we have this. So it's from here to here before we have this. So we'll look at it closely and see what we're having. So this is divided into 3 waves, actually. What we have in the middle is divided into 3 waves. So which is here is 1, and the middle part is here, and before we have this last leg of it. And that is what I can see here. So we have 1 here, and the one in the middle here is a bridge, really, and which is a correction, really, which is A, B, and C, before we have this new move. So it has changed the whole thing completely to indicate that a wave, you know, start from that place, you know, and it has changed it completely. You can say this is 1, the first wave, and this is the end of the second wave, and that this is the 3rd wave. So I would rather want to look at this as an ABC, you know. I want to look at this as an ABC. So this is the first wave. So before we have this one in the middle. So the one in the middle and this is the beginning of the new one, which is the last one. So after breaking this, marks give rise to this one. So this one is where this one stalled on the higher time frame. So this is the one in the middle now. So this one moved like this and give rise to this one in the middle, which is the bridge, and this is the end of it. So if we try to look at the fib retracement here, you will see it more clearly on the lower time, higher time frame. So if we go up like this and say this is the limit of the first, and that the second came down right here. So let's look at where this one actually has stalled. This one has stalled at 127, which is quite okay for this correction. So this is 130, 123, and this is 127, exactly 127. That's where the thing stalled. So let's look at it again on the upper time frame. So let's look at it on the upper time frame. So the upper time frame, it's like we divide it into 3 sections. And the first section is here that marks where this one got to. Okay, this trade actually did some mess in the middle to get to this point, and it first came down here to finish this before running up. So, you know, this one, it makes it more clearer for me that after this push up here, we had a rally down, and which formed the lower limit before these bulls got it up and came down. So the breach in the middle is what is very difficult for most people to understand. So if I want to draw something to explain the movement here, so it would have been like this, that we add the first move. I want you to see, we add the first move to the upside here, to that point, which is the first move. Then we now add another move from here. This is A now. We have this move to this side, which is B. Okay, then we now have this move to the upside. And this move is C. That is what it looks like. So you can look at this again and see the way it's more clearer to me, because when you are trying to count in the lower time frame, at times you might just get mixed up and you will not understand what it has done. Yeah, it still looks like a zigzag anyway. It still looks like a zigzag anyway, but you know, the correction in the middle, in the lower time frame, will mess you up if you don't know. But when you look at it on the higher time frame, the way wave moved, then you will understand it better. That, see, this one came right down and bullish to this point, and we add the first correction to the downside, which is look like a 2 of inside of this one here that finished here. This is the first one, and this was interrupted here. But again, it formed the basis for the next move. And we had this limit A. And breaking these points, you have to now be looking at this as support and resistance now, because you know, breaking this point marks the beginning of the new move. If this one has been broken to the downside, then it will negate this one as a B. So we have this A, B, and a C. And this is not like an 100%. If you are 100%, this leg would have been equal to this leg, but it's still a zigzag. Now, why is it a zigzag? Let's see. If it falls like a zigzag, from here, to that place. So this is like more than a 50. The 50 is here, is more than a 50, going to 61. Once that's gone beyond 50, then it is a zigzag. Then we'll now take a retracement tool to see where it has ended from here to this point and to this point. And the treatment we said, even looking at it on the higher time frame here, on the higher time frame is pushing it here, it's still 127 because it's just a bit above here. This is 123. So if you had worked with 123, it would have been perfect for you also to get something. So it's actually 123, but you know, the minutes, whatever, on the lower time frame will give you 127, which is okay. So that's a zigzag. It's nothing but a zigzag up. You know, if it's like a flat, you know, probably would have pushed to 90 here. B leg would have pushed to 90 or over 90 here. So it's a zigzag up, which was, so now when we now finish the middle, the leg that is going to run up, of course, we must know that it's going to be another zigzag up. That's just what we should be expecting. Because A wave is that means the A wave now is in blue, is a zigzag up, and we don't know what is going to give us. Of course, I don't expect that this one in the middle will give us a zigzag. It doesn't work like that. If this one has been a zigzag, and the one in the middle definitely is going to be a flat. It cannot be a triangle because triangle is going to end it. So it's going to be a flat. So what kind of flat we're going to see? If it's going to be, it can only be a regular flat, a running flat, extended flat. We don't know yet. But then we're going to decide what this one is doing in the middle to know what it's going to be. But again, you should know that the entire run of this depends on where exactly it gets to here. So I want to do something to make this one better for us to see. Let me take this one out. I'll take this one out. I will take this one out. Okay, so now we're going to project those areas we're going to have this coming down. One thing I'm telling us is that I don't expect that the trade, what is coming down is going to be a zigzag. So it cannot be a zigzag. That is what I'm saying, really. That is what I'm saying, because this one has formed a zigzag. Please, let's pay attention to what I'm saying. This one had gone up as a zigzag. So the one coming down here cannot be a zigzag. After it ran itself, it won't be a zigzag. B wave, you can have a zigzag, and the one in the middle now gives you another zigzag to now walk the last wave as a zigzag. So a zigzag, and a zigzag to now make a zigzag of a zigzag of like this. I doubt if that is going to happen, but it's early days. I doubt if that's going to happen. So I should be expecting a flat in the middle here. So if it's going to be a flat in the middle, and to what extent will this flat run? Okay, to what extent will this flat run? Now, if the flat is going to give me a 61.8, which is here, if it's going to give me that, a 61.8, we know that a 60.1.8 can still work for what? Can still work for a running flat. Can that, it cannot even work for a running flat. 61.8 cannot work for a running flat. Looking at this one, it cannot. It cannot. It cannot. This is a zigzag, and if this one is going to be a where we are going to see what's going to be in the middle here, but definitely I'm expecting a flat formation in the middle. This B wave should run like a flat in the middle, and that the last C leg will run another zigzag to finish. But now, the one in the middle, which is a flat, is what we are now thinking what is going to do. Definitely is going to walk down as a flat. It's going to walk down as a flat. Now, walking down as a flat is what we are trying to wrap our head. For instance, let me come back to this. You know, this is A, and the B part of it made it a zigzag and run C to complete A, which is blue. Now, this has done A, B, and C to give me a blue, and it's a zigzag. Now, I expect this B wave also to give me a triad also. It's going to be a three-wave structure down. It's not going to be a single wave down. So it's going to be a three-wave down. It's going to also do A, B, and a C in the red degree to finish this one, which is blue, then to run under three-wave structure up to this limit. If it's not going to pair 6. So that is what I'm expecting. But then, to what extent are we going to have this? To what extent are we going to have this? If we compare this A and B, this one had gone up like a zigzag. This one has gone up as a zigzag. So if it's a zigzag that has gone up, and this leg is coming down, the leg that is coming down is what we are going to pay attention to, because it's going to be a flat. If it's going to be a flat, it's not going to run that flat with this one. It's going to be a flat in itself, in its own A, B, and C configuration. And that is what we should expect. It's going to be a flat in its own configuration. Now, with its own flat now, stall at 61, with its own flat, get to 76, with its own flat, get to 85, then with its own flat, get to 90, which is red now. With its own flat, get to 90. Of course, I don't expect its own flat to run below here. That would mean something else, because we have not finished the structure. It should give us a propensity for more upside. So to give us a propensity for more upside, I think from 61, 78, 85, and 90 are the likely level that we might see a push-off of B. Might also do 50. Might also do a 50. Let me put it down. A 50, which is here. Might also do a 50. A 50. Might also do a 50. So we are seeing line of action between that level. Okay, so these are the area I'll be watching price between a 50 and a 90 for more upside. And that is huge, really. You know, that is huge, really. That's how many pips. We are looking at a decision of between 172 pips, and which we must get 172 pips. So the trick is this. The trick is this. Once we have A completes its leg down, which is the small a, we are going to see how the small c, B is going to go up to tell where the last C is going to be. The last C will decide where we get out, really. So for now, I might want to put my TP around here, which is around 76, sorry, around 61. I want to put it around 61, around this area. I want to put it around this area. And if it now work out like that, and put this one here, so though it's a flat in the middle, it will still be working like a zigzag of the entire structure. This one had run up like a zigzag. This one had formed a flat in the middle to also pave way for this zigzag. And that, I think that is what is going to happen. So it's not going to run to 90. Yes, it's not going to run to 90, because if this one had given a leg as a zigzag, so to make the B wave, to make her to give us an impression of a zigzag, it actually is going to be between these 50, 61, 76, or 85. It won't get to 90. So this is where I want to put my stop loss, really. It won't get to 90. I don't expect to get to 90, because if this one should get to 90, then it's giving an impression that this one is what is a flat, which is a three leg, and it's not a zigzag anymore here. And if it's a flat, then this one will mean another thing entirely. But this is an early indication, because this one clearly cuts it out for me that it's a zigzag here. So if the A arm is a zigzag, then this can be a flat to give the configuration a give out of C as a zigzag. So will be in between 50, 61, 76, 85. These are the three areas. These are the four areas: 50, 61, 76, and 85. These are the areas I will expect this leg to run to. So, but let's see how A will come down for B to go up and for us to have a C leg of that arm of a B to complete B, which of course we said the limit is at this level if it's going to be a zigzag. Then if it's going to be a zigzag, then we'll now have this one run up here to get to this point. But I don't think it's going to sink that low. I don't think it's going to sink that low. Do you know why I said it's not going to sink that low? Because if it's a zigzag on the higher time frame pattern, you know, have a knack for something. This is the knack they have for. They are going to make sure that their own A and C leg are equal, because it's going to be a zigzag and a zigzag. So I'm just exposing something to us, so for us to know what. So it's going to be like this. So that A will be equal to C. At the end of the day, it's going to be equal to C. That A is going to be equal to 6. So wherever we have, it should touch this. It should at least touch this. C should at least touch that place. C should at least touch that place. C should at least touch that place. That's what I'm trying to say. C should at least touch that place. So what might happen, let me begin to do something. If we continue to do this, if you continue to do this, so we might see that you might see that something might just walk around here. You know, C cannot be less than this. It might just be a bit longer than it, which you must know, because if it's going to walk like that, it's going to work like that because it cannot be less than 100% of it. What it can be again, it can be a 123 of it. So if this is 100 of it, then we are saying that the price may just return here to touch here. And if it's going to be 123% of it, so this is what we should expect. If it's going to be 123% of it, this is what it's going to look like. 123% of it is going to look like this. So we are just trying to project. So a 123 of it will look like this. Let's use this. It will look like this. Okay. Will look like that. So it will look like that. So we are trying to find the lower limit of the B wave. So we're trying to find the lower limit of the B wave that is coming down to give rise to C, which is going to end somewhere here. These are just early permutation. These are early permutation. So if that is the case, we expect 50 here. So it may just work out at 61. So these are the area. I think the best bet is to target a 50 That will be the best area to target a 50. That would be the best thing to do to target a 50. You might just put a little below it here. So around 5.6, 5.654. And that is where we should expect to exit Euro USD. But the only thing is that if price begin to correct before here, if price corrects before here, then it's going to break through it. That's the other thing. If price does not correct before it gets here, then it may stall here. So this is will be a very good place to stop and to TP. Below it is just an assumption. You might not get to 61. That's about 30 pips below that, which you cannot bet on. You don't want to bet on. So I don't know if you're getting the point I'm making now. Now, we did establish that this is lost already for the downside. This trend has been broken, like I taught us, it has been broken. So let me take this one off. If you watch this video over and over, you understand what I've done here to tell you that this is a zigzag and that we expect another zigzag leg up. So if you're going to expect a zigzag leg up, this one has given a zigzag. So the bridge here should mark up for this zigzag because it's going to be zigzag. This, of course, is going to be a flat, and this will mark up for another zigzag. So, and that zigzag, if you expect, if I were you, I will be putting my buy limit order around this area between this zone here. That's what I will be doing. But again, I will tactically want to also look at what this one is going to do in the middle, because for all you care about, this may just be A of this leg, and this may just be B of this leg, and that the C of the leg is coming down. And afterwards, it's going to bounce up again. That is what I can see here. So we must be ready to exit any minute that this one touches down. So you don't want to lose that. So let's look at it further on this time frame now, on the lower time frame. So this, it's a gunner. So, and we have confirmed that this is the first part of the bridge on the bigger time frame, the first part of the bridge, which we are done with. So when it finished this wave here, you know, this one will not be an A, and you will get it wrong if you make this one an A. So we are going to look at the middle bridge really. So the middle bridge is a triad, which is 1, 2, and 3 to finish. So the high and the low point of it is the bridge, you know, is the bridge of that, and we now have the last leg. Okay, so that is what it is. That is what it is. And if this one ran, if it's a zigzag structure, then it's nothing but a zigzag structure to the upside, which means this one has run like a 5-wave structure, and this one is a flat in the, which is the bridge. So you should expect that the bridge in the middle that we are seeing is going to also work like this on the much bigger time frame, maybe on the daily time frame, because this is a bridge, which is this, and this is B. You know, you can say this is A of this bridge in the middle, and this is B of it, and this is C of it in the middle before we begin to go up. And for me, this is nothing but a running flat here in the middle. It's a running flat in the middle. So for that correction, it's a running flat in the middle. Yeah, it's a running flat in the middle. So you can see that it's a running flat in the middle there. And that's the way a running flat is going to look like. So that is a running flat in the middle. So we might be expecting that flat on the bigger time frame also here. So this is a running flat in the middle, where the first one goes low and the second one goes higher, which is B will run higher, and the last C leg will run shallower. So now, in that case, if this is A leg, which it can be, if it's A leg, which is possibly it can be. I said I don't want it to pass one now, but then it's not really easy to teach these things for you to grab it. So if it is an A and the B is going up, and that is one thing you must see quickly, and the B leg of it is going up here. It is the B leg of it, of that bridge in the middle. So let's see where the C is going to be. The C leg of that bridge in the middle is going to be. So we said that it should be in between here. Because this is 61, and we said price may not get there. So you can see what I drew here. Let me push them close to your view. Let me put them close to your view. So let me put them close to your view for you to see. So now closer to your view now. So now, would it work like that? Let's see. Now this one from here, from this point to this point, because I'm expecting a flat, it's giving me a formation of a zigzag to the downside. Okay, it might not just be a flat straight. It might not be a flat straight. It might be having a more complex structure in the middle. You might be having a more complex structure in the middle, because this is 85, and that also is a suspect for a zigzag in the middle of the corrective or the connector, which is B. So it's giving me that that is a connector, and if that is the case, for me to have an exit point here, if it's going to be like that, then I will expect, I will tell you what I'm thinking will play out. Now, the 100 of this will be air, which is around this area, which is 100. And the 123 of this will be air, which is most likely the level, or let's say 120, yes, which is around 50 here. So 50, this is 50. So 50 will be air. So this is most, of course, the price will get air for sure. If it's going to go beyond that, it's one thing I wouldn't really now know. Okay. But what I'm suspecting is this. I'm suspecting that if our C ends here, if our C is going to end in that place, and this is going to give me like this. This is going to run like this. This is going to run like this. Let me use this. It's going to run like that. So in terms of wave, I want us to actually understand this thing. Run like that for B in terms of wave, and run down like this for C in terms of wave. So if that comes down like that, then we know that this is a zigzag down. Now, what I think may happen, so because if that happens, if that's the case, it would be nice for me, for us to exit here. If we exit here, and probably what we can do is to buy from here. If we get a price action around this area, is to buy from here, because it's going to go up. It's going to go up. So it can go up from here or from here itself. That is what we should expect. But I'm not just expecting that this structure will be enough to complete these, because I'm suspecting that they're going to frustrate us and do rubbish in the middle. Now, so if they're going to do rubbish in the middle, I will expect this is an X leg to go up. If X legs want to go up, I will expect the X leg to now take itself from the beginning here to this point here for my X. And we know X can be 50, 51, 76, or 85, and no more than that. So if this one should come down here, then I would expect my X not to go beyond this area. If price should breach this area, then once we complete this leg down, then we're not likely to come down again if price should breach this area. So I could as well use one color for that. What color should I use for this now? That is not been using. So not so many color here. Okay, let me. Oh God. Oh God. Which one should I use? Okay, let me use this. It doesn't really matter. So let me use that. What I'm trying to say is that in the middle, I'm expecting at least a 7 swing structure. That's what I'm telling us. I'm expecting a 7 swing structure, to waste our time here. And if that now should be the case, then I would expect that this one will be given up again from here for that C. And this shouldn't go beyond here. It shouldn't go beyond here for X. For X. So if we are going to have our X, once this 07548 is not breached, if you're going to have this one for X, and the only way you can guide whatever trend is happening is what I've taught us, really. Is what I've taught us. If I go, I will still show you. I might just be able to do this one alone and not run on AUD USD. So, okay. So if this one is going to be the case now, and we have an X here, then we're not going to have another, and this might not be a W, an X, to now have another triad. And that triad might not be the last triad, which can be, if this one is going to be a zigzag, if it goes lower, upper than this, and of course, this price action has told me they're not even going to do more than this. And that's what I'm expecting. I'm expecting more downside, and we're going to exit around this area to watch for what's going to happen. So if I see any price action, we should just go up and see if they're going to exit here. If we break this structure, then forget it, we are going up. And this is not a connector anymore. We're not going to have a complex correction anymore if you should reach this price level here. So if it's not going to be X, and that's how to begin to peruse. So now if it's going to come down, I don't know how it's going to now come down, but we might have another one run down like this. What it's going to be, I don't know. What is going to be, I don't know. In case it decide to do that, to have another leg down, what is going to be, I don't know. So, but when it forms itself, you should have an idea of what it will be. So we cannot have another leg like that. Have another leg like that. And another leg to come down like this. It's not impossible. Because I'm projecting this one now. I'm projecting this structure, which may happen. Okay, and that will now make it 7 swing already. 1, 2, 3, 4, 5, 6, 7. And so if we have that, then we might just now have the last push to the upside, which will now say, okay, we are going up to break our structure. So we are going up to break our structure. So which might just be a way to go. And this would have now completed our B if that would work itself out that way. So we should expect that if this one is an A, from here to here will now be the B. But for now, what is clear in the middle is that we may have done an A of the first move and a B and a C. And this is guaranteed for me. Price may go down, but I don't expect that will be the case, given that what these are done here, B had made this one a zigzag, but definitely I don't expect that this will finish the structure of correction. We're still going to have a leg up, which may stall as 50 or 61, but not more than 85. It's going to be an X connector for us to have a new set of correction entirely. So if we are having a new set, once we see any price action here, I want to continue to monitor the internal structure of that one also to see where we're going to exit and to now buy eventually upwards. So if I'm going to be buying in the middle here, of course, we're going to be using something that is small to buy, not until the structure in the middle is complete. And how do we now begin to monitor all these trends? Simple. If what we did for this one is to draw until it's broken, I hope too much of structure of drawing is not confusing you. Don't look at all these ones anymore. So when you look at this is A. A has been broken to the upside. That marks the end of A, okay? So we know that A is ended. That with A is ended. Then we're looking at B. From here to here, you connect your B. And that's one thing, that's the importance of you knowing what the price is doing. So once this one is taken to the downside, we know that B is completely gone and we are doing a C. But now we have entered around here, which is the importance of what price action to tell us that we're sending the price down. So what I expect that's going to happen here is ultimately we're going to break down onto the downside. Once we go down here, then we know that we are correcting C. And then that would have confirmed to us that this leg that is coming down is going to either stall here or at least get to this point. And I will be putting a small lot size here to see how this one goes up. Once I see this one breach, I'll be putting a small lot size here in case they want to shock us by going further down, but I know it's going to be coming up. And if you should breach this level, I might want to close for a loss at 61 to allow the price to go deeper down. Because if this happens, it might actually now get here or here, which I don't see from the structure. If it will get here ultimately, I don't see that now. I don't see that now. But we'll take it as the structure forms. I'm just projecting this will be still be there till next week or 2 weeks for us to see if it's going to work like that. I'll be giving an update on this. So we need this one to be breached now before we get to this point. And all these things are not small, really, in the middle. From here itself, to this point, it's about 200 pips, you know. And if you catch any move from here to this side, also is another almost like 180 pips. And if we enter again, once we see a price action here, a 1 hour price action here, we want to enter since that we want to risk up to 90, that it shouldn't breach 90, shouldn't breach this place. In case it's an X, of course, you won't lose. You won't lose two. You won't even lose if you enter here to sell. You won't even lose $1. You know, to gain. If it's going to come all the way down here, to gain. You won't lose $1 to gain about 240 pips. So that's how to engage it. So crucial levels here. So once we have this one also running down, then we can now draw a trend line like this. This will be another projection of a trend line like this to see when the C leg that is coming down is taking. So a projection when it's taking. Too much of lines, but the way I draw this line should be very clear to you. Too much of line, the way I drew this line should be very clear to you. So for now, this has to be taken. So now when you play over and over, you get to see that this is when C will be taken. But that's still forming. I would just want to leave these and these two, how I did the projection of these and how I did all these ones in the middle projecting. So we can always adjust these demonstrated lines once we see this and we see this one off, because X may actually be completed in the middle and not get it. But this is the upper limit of X. It is of X and not 90. So I think that is all I can do for now on this. Let me just take in a Cadjpy the yen, 1 year pair, which is card yen, and just end the training there. Card yen. Let me take card yen and I do this. I think card yen. Now you knew that we were correcting this wave, and this was actually 5-1 here. We were correcting this wave, and I think the first part of the video that I did last week, I was giving us a scenario, a possible scenario here, that it looks like this one had not gone deeper than others, but others are done like 50, 61, a bit over 61 of the retracement to the downside. So that's more like, even a suspicion. And all of them did almost, practically like a zigzag down, and I was thinking that now it could be that we are going to have a complex correction in the middle here to go further down. And if that is not the case, we should take this as that wave 2 has ended here, which is, if this one is 5-1, that 5-2 may have ended here. We might be correcting 5-3. And that is what it turned out to be, that we are now correcting a 5-3. So what I said was that this one is like a 5-5-1, 5-1, 5-1, and we now have in the middle a 5-3, a 5-2, a 5-2, a 5-2, this is a 5-2, a 5-1, and we are now trying to see up a 5-3. We're trying to see up a 5-3, a 5-3. So trying to see up a 5-3, it's not as simple as you think it's going to look. Okay, so now a 5-3 is what we're trying to see off now. And we said a 5-3, of course, because 5-1 is broken, tells you that it has been broken, and so we're going to see we're seeing up a 5-3. So which is like that, but we can't do anything now because we have missed it. So how do we project the end of a 5-3? So by taking our field retracement tools, we start from the from the end of where the 5-2 ends to the beginning of to the end of a 5-1 up here, then to the end of that wave here. Oh, no. That is not it. That is not it. This is a 5-2. I think we're going to work on this 5-3 now. So because the 5-3 are given itself in the middle here now. So this is one of it and a 2 of it. So okay, let me do something. Let me do something. This is internal structure of it. This is one of it now. So this had finished with one of that correction of the entire wave 1 of the 3. This is a 3-1 now. This is a 3-1 now. In the minor degree now. This is a 3-1. That's a 3-1. Okay. So, and this is a 3-2. That's a 3-2. This is a 3-2. This is a 3-2. This is going to go all the way up. We don't know where it's going to go. So that's a 3-2 here. So we are actually inside of a 3-3. We're inside of a 3-3. We're inside of a 3-3. A 3-3. A 3-3 of 5. Oh. A 3-3 of 5. Don't get it wrong. A 3-3 of 5-3. So that's just the thing. We're inside of a 3-3 of 5-3. So, and we're going to have a 4 of it and a 5 of it to complete, to complete it. They are going to come down. So, it's complex trying to count all these waves. So this one came like a zigzag, and this also corrected like a zigzag to the downside. Actually corrected like a zigzag to the downside before we have these offshoots. But between here and here, if you want to draw where this one is likely to get to, so we start from the beginning of this one, which is the where 3-1 started from, to the end of that 3-1 to 2 here. So where we may have this one stored, we may have this one stored at these levels. We may have this one stored at these levels. That's the first level. I will mark them for you. I'll mark them for you later. Good. So we may have it stored at 61, which is here, and price is about breaking that level now. We may have it stored at 200. We may have it stored at 261, and we may have it up to that level, which is at 323 at this level. So those are the areas that we may have this wave that is going up stall, and it's still early to say. But what is going to help us to know to navigate is this. We are going to see this one now. This is completely 3-1, completely 3-2. Now, inside of this 3-3 that is going up now, it will have its own 1, its own 2, and its own 3-3. So that is what we have to map out now. So between its own 1 and its own 2, which is the internal structure of 3, the third wave from 3-2 here, is this. That's the way it has gone. That's the way it has gone. That's the way it has gone, like that. Okay. Now, you now know that it went up like this. This is its own. I hope you will see it. This is where its own 1 stored at this level, and its own 2 stored at somewhere here. Yeah, its own 2 stored at somewhere there, which I will do later. Then we now have the inside of this 3. So to now do inside of this 3, we're going to go all the way like this. So inside of this 3. So we are waiting for this to breach this, to give us a 4 of this 3 that is going up. It's going to give us a 4, give us a 5 of it. When it gives us a 5 of it, then it's not going to come back to 3-3-3-2. 2 of it is going to come down low. It's not going to push beyond here before we now have more structure to the upside. So we are going to see how that one will play out. Let me so this is what I've done for us. If we go to 4-hour candles, then we will see it much better. I don't want to waste a lot of time here. So I think it's better on the 4-hour candle. So yeah, it's better on the 4-hour candle. So after this move, so the big 3-2 is here. Then after this move, we add the structure. One actually ended here. Okay. First wave of that ended here, and 2 actually ended here. So 2 actually ended here. And so if you look at the field retracement, so that's about 61 or thereabouts. You can take it to come down here, it's about 70, 85. To touch here, it's about 85 of this move here. Before we now finish the 5th wave and now. Now, so the inside of this wave is what we want to see of now. The inside of this wave is what we want to see of now. So which, for us to get it clearly, it's going to be like this. Which is the 3rd wave. From here. I think it's better that way. Just take it to. So this is manageable this way. Good. So this is what we are looking at. This structure is still going up. Will this one be a wave to give us 4? It's going to give us a 4. Maybe it will come to this level around this area. If it comes around this area and it gives a 4 around this area, it's going to give a 5. If it gives a 5, then we're not going to probably sell that 5 to 2 of this entire move. So we're going to sell a 2 of this entire move. So we are waiting for this to finish. To finish the 5, it's almost finishing it. I believe this is the 4th of the internal structure of this. So, and it will now finish the 5 to this wave 2 now, not this wave 2. This wave 2 here, if this is the 2 of his own internal structure. So I believe that this is like a 2 and a 3 of his own internal structure to give a 4 of his own internal structure and trying to now finish up to 5. Then to now give us a 4th wave of between here and where this one ends, to know where the 4th wave is. Of course, going to come down in a triad, 1, 2, A, B, C, and we are going to, if you want to write that C leg up to 5, you can do that with minimal risk. And once we complete 5 up, we'll now see how we follow it down. We'll see how we follow it down. So for now, I just don't want us to do anything on UMP here because that's broken the structure above here. So this one still looks like, okay, it has more upside to do. Let's see if it gives us I think it has a bit more upside to do. Once this is broken, can you see after drawing it on the 4-hour, can you see the way it has given me a perfect whatever, so that we'll know on time once this structure is broken to the downside, and we can now have a 4th, a 5th, and begin to now come down and targeting this level of trend support for more upside to now do a 3-3. And that three, the inside of three leg is going to be very big. That means 5-3 now. It's going to be 5-3, 3 leg is going to be very big because we have not finished 5-3-3 at all. We just completed 2. So the internet of the third wave of it is what we are doing now. So is the third wave that is going up, but we just done a 1 of it and a 2 of it. So the 3 is about a 3. This one has a 1, then we have a 2 before we now do a long 3. We are approaching the end of the MPS gradually, but we still have some more time with it. For now, I think that's all I want to say here. Let's go and watch the video. I think it's about one another. It's longer than that.